The S&P has gone nuts to the upside when it should be rolling over into a bear market proper, which is what it was doing. It went down to 6,300. Well, this is in line with expectation. Then we got a bounce to 6,620. That's expected. And then it gapped higher and then just kept going and going. Crossed 7,000, crossed 7060, which was like a wedge I'd drawn on a chart. See how high it could go on. But it's gone through. It's 7165. This is pure full-blown FOMO Mania, euphoria, where even the garbage stocks that have been dead for years are now pumping, such as on Semi, DIODE, GFS, and Intel. That 2x on where it was a month ago, $86. That is nuts. Intel, yeah, they had good earnings, but come on. 2x on a month ago. So, welcome to the Trump mad bastard stock market. That's what we got here now. It's a bloody mad bastard market. This is what it should be doing. No, it should be. There's the trend. There's the expectations. They got the rally. 6620, and we got the wedge there. This is a mania, FOMO Mania. It's not built on any rhyme or reason. There is no logic to it. There's no logic. This is the expected trend trajectory. We did get a buying opportunity though, 6,300, in a number of stocks such as Meta, Microsoft, and a dozen others, but not to the degree one is aiming for. So there was some buying, but look at this. This is nuts. Well, it's mad. It's a mad bastard stock market. So how does one try and trade a market like this? This is how you do it.
The United States will take immediate action to stop the war with Iran.
Buy now! Buy! $5 million U.S. stocks!
Let me be clear, this pause is temporary. We may resume operations as early as tomorrow.
Holy fucking shit! Sell!
Let's take a look at the oil price. It's $95. It's averaging about $95 over the last 2 months. That means global supply chains are breaking. There's stuff breaking that isn't visible now. You only know about it when it explodes. Huge inflation is in the pipeline, none of which is being discounted by the stock market. The ceasefire, peace talks, they're a blooming load of con. There's no, Iran's not going to make any deal with the devil, with the Trump devil regime. There's not going to be any peace, any ceasefire. You know, it's literally a joke. Hormuz open, closed, open, closed. What kind of madhouse are we living through now?
You go look at this. It's open. Then you go look at this, and then they're closed. So they go open, and then they're closed. Okay, you go. You try. Come on.
Yeah, I think I got it.
Come on, you go.
Open.
Yeah, okay. Now this way.
Close.
No, they're closed.
Close.
Yeah, it's sad. That again?
Yeah, I think I...
Come on, that again.
Open.
Yeah, and then this way.
Still open.
Okay.
Yeah, you almost got me.
And then the tricky diggy.
Yes, you're
Okay,
very
come on,
tricky.
now you go.
Yeah, I really think I...
Come on, you go.
All right.
Okay.
Open.
Yeah.
Close.
It's sad,
Yeah, it's
the
very
close.
sad.
Do it again.
Open.
Yeah.
Close.
Now do the faster.
Open.
Cool.
Close.
Now do a little dance, do a little dance, do a little dance.
Open. Close.
You're funny.
95. It's gonna go over 120. It's gonna go. It doesn't look like it's falling. This looks like it's marking time before the next leg up. So oil prices are going higher. Don't know if they're going to get to 150, but it's going above 120. And, you know, 95 is economic pain. Above 120 is catastrophic. You know, nations are going to break. They're already breaking 2 months, 3 months, and you'll start seeing panic in some nations. You know, and the prices, inflation is going to go 1% per month. Yeah, you don't understand how fragile the system is. One only needs to look at the bond market. You know, in the US, they're talking about, oh, Walsh, whatever his name is, he's going to come in, he's going to cut rates. That's going to make no difference. Yeah, cutting the short end doesn't mean the long end's going to fall. The long end's been trending higher. Look, this is the trend. This is the trend. It's been trending higher from 4%, 3.9%. It's 4.5% the trend. Currently correcting. It's going to go higher. Long yields are going to go higher. Why? Because of the inflation. Because if he cuts short end, it implies higher future inflation. It's nuts. I tell you, it's mad. And then there's the big elephant in the room. $39 trillion of debt. That's like the Higgs boson. You're stable, the system's stable, but it's not at the lowest energy state. It could flip and destroy the whole universe, the whole financial system. It's on a precipice, and we don't even realize how bad it is. You got this cabal in the White House that's stealing from the taxpayer, enriching themselves, and they're risking destroying everything. $39 trillion debt, 1.5 trillion defense budget. Are you mad? That's insanity. You don't have the money. You're planning another 1.5 trillion on top of the debt. 3 trillion is going to be 40 trillion within months. It's insane. Inflation's coming, and the risk is that the bond market collapses. You can't predict it because it's like a singularity event. It's the end, but there's ripples. The ripples in the bond market. The yields are going up. Yeah, and you got some divergence where the stock market's concerned. You got some divergence against the Dow. That's the problem with looking at the S&P, because one wants it to move in a particular direction. If you want to buy, then you want it. Obviously, everyone wants to buy, so they want it to move down. But that's not the expectations where individual stocks are. You got the opportunity in Microsoft Meta. So what are you looking at the S&P for? It's a red herring, a nothing burger, because it ain't. Because I'm not accumulating. Who's accumulating the S&P? It's garbage. It moves what? Average of 10% a year. Average. You know, for a decade it moved nowhere. It's the AI target stocks where the profits come from, not the S&P. And so my focus is on that on a day-to-day basis. Yeah, these AI target stocks, there's my current exposure after trimming. Not much. I'm nearly 73% in cash now. I did accumulate a lot of Microsoft. So that's where the opportunities are to accumulate and distribute, where there's a spectrum of activity from those stocks that are moving as expected, such as what Microsoft did and Meta and others, whilst there are those that have gone nuts to the upside. They usually kick me out of all of my holdings, such as AMD and TSMC. I don't hold any of them now, and once upon a time they were massive positions, both of them, but I've been kicked out because they've gone nuts to the upside. And that is the focus of this video, a peek at what's going on with the individual stocks in terms of the bear market or otherwise. So let's take a look at the AI tech stocks, how they're doing. So let's have a look at AMT. Look, it's gone nuts to the upside. $417. We were accumulating this during the bear market at 120. 120 was my lowest buy. Now $400, that is nuts. I do I hold any? Let me have a look. No, I've sold out of AIM, got nothing. It's trading at a PE range of 230% of its PE range. That is nuts. AIM is extremely overvalued, even though it's got strong earnings growth. Even in a year's time, it only falls to 150%. This is pure FOMO mania. I can't buy AIM until it drops to here, around 260. The buying range for AIM is what is it? 260, yeah, 262 to 148. So when it falls down here, that's when I'll start accumulating all the way down to here. 160 will be getting lucky, but I can't buy this. I'm being kicked out of my position completely because it's gone nuts to the upside. What about AMD? Oh, the advanced money destroyer. Look at it, it's took off like a rocket. 352, that is crazy. For a long while, when it was trading here, I say ultimately AMD targets 300. Now it's busted through that, and so I sold my last AMD share at 301. Yeah, by a limit order. I thought, oh, that's it, I'm out, and it blasted off. We did get some opportunity to accumulate when it topped out at 268. It dropped to 186. That is a decent swing down of about what was it, 36%? Is that correct? No, let me have a look. No, 26%. It dropped 26%. So I did accumulate some, but this ramp up and the blast off past 268 and the final is just, it's nuts. It's gone nuts to the upside. What's AMD's metrics? It's gonna. I'm not gonna do any buying on below 200. It's gonna have to fall below 200. It's gone nuts the upside. P range is 200%. It's trading at 200% with P range. That means it should halve. It should go down to 150 or 160. It's got very strong earnings growth. I'll give you that. But it doesn't justify 200% of its P range. This is pure FOMO. This I consider over up to 230 is overvalued, above 230 is FOMO, and this is just euphoric nuts. It's gonna go below the 186. It's gonna go below 150 probably, because all of this needs to be unwound to the downside. If it topped off here, yeah, if it topped off at 260, then there's a chance that it would bottom around 170. But now that it's gone nuts to the upside, this needs to be unwound. And for that, it needs to go down a lot. Yeah, I would not be surprised if it's back down to 120. But for right now, we're in FOMO Mania. And I'm out. I hold no AMD now. And again, this used to be a huge position. But Amazon, oh, that's behaving. It had a decent correction, 24%. Opportunity to accumulate. It's basically not gone nowhere. It's behaving itself. Yes, it's made a new all-time high, but that's not surprising given what the others are doing. So it's not surprising it's trading at a new all-time high. But it's not gone nuts to the upside. In valuation terms, it's trading at 70%, 77% of its P range, and it's got decent earnings growth. So it's not ripped to the upside. So yeah, it could correct during the bear market. I would expect it to trade below 200, and it could go to 170. Yeah, in fact, that's my target, 170. So that's quite a big drop from here to 170. It's 35% drop as the bear market proper, 50% drop. See, all of these stocks, well, most of them should drop 50%, at least 50% during the bear market, which for Amazon would target, what is it, about, I don't think we're going to get that low on that Amazon. But But it's just a guide, but I think 170 we should aim for. But right now it's trading at new all-time high, and I do hold because it's not ripped. If it went to some daft like 350, then I would be probably out of Amazon as well. ASML, it's behaving itself. It topped out at 1550, and now it's not even. I can't see it. No, it's not traded to a new all-time high yet, so it's behaving itself in terms of the bear market. It did correct. I can't see. Yeah, it did correct down to 1240, which is a pretty about 20% drop, which gave an opportunity to accumulate some. I do hold some ASML, but I've trimmed it, so I don't hold much. 0.3% of portfolio. So I have some ammo if it does rip to the upside, like if it goes to somewhere like 1900, I'll be out of ASML as well. But for the now, it's behaving itself. It's not like in euphoria, which means it should target 1100. I'll start accumulating around here. 20% drop again, because I made on this. I bought on this. I trimmed some, so I'll start accumulating around 1250 with the bigger buys around 1100, and even bigger buys should it go below 1000. But I think that'll be pushing it now. Yeah, it could go down. It should go down below 1000. But we'll see. But it's behaving itself unlike the others. AVGO is another stock that has been behaving itself during the bear market, and I still hold some, 0.2% of portfolio. It fell by 30%. That is a sizable drop, and it gave plenty of opportunity to accumulate under 300. Look, so if you missed that, you had opportunity here and here. It's given opportunity to accumulate at below 300, which I took. And now it's ripped to the upside, but it's not going nuts to the upside. It's metrics, yes, it's not that. It is expensive at 154% P range, but it's not nuts, and it's got strong earnings growth. That means 154% drops to 100% in a year's time. So this is not euphoria. It's expected given what everything else is doing. It's expected. I've trimmed some at around 412, and I'll keep trimming as it goes up, but I don't want to go to zero. To me, to go to zero on Broadcom, you'd have to go to somewhere like 560. You know, it needs to, it's a lot higher than where it's currently trading for I go to zero position. But I don't hold much. Right now, Google, the big daddy Google, that's behaving. It's behaving at a 22% drop. Opportunity to accumulate, and I was getting opportunity to sell. This is expected bear market behavior. Yeah, I'm expecting violent upswings and violent downswings. So this is in line with expected, especially considering, well, I'm just repeating myself, but it's expected. So it's behaving itself. It's giving an opportunity to trim. I hold a lot of Google, 1.2% of portfolio. This is expensive at 137%, but it's not FOMO Mania. 137% of P range, which falls to 94%. So it's not, and like I said, I don't expect it to fall much. Now, the target was 244, and it came, within 30 points, $30 of its target for the bear market. So I'm not expecting it to shit the bed and go down to something like 160. If it does, that would be great. That would be a great buying opportunity. It could go to 200, but that would be a case of getting lucky. We got down to 270, which, given where it stands, was a good place to accumulate. So Google's behaving itself. IBM is perfectly behaving itself in terms of bear market expectations. It fell by 32%, and it's currently rallied up to here a little bit, about 15% up. It's just like, you know, people look at the S&P, where's the bear market? Yeah, look, this is the bear market. I'm just giving you evidence of it. So I'd say most of the stocks are behaving themselves. Well, at least half the stocks. And IBM is right on point for what to expect during the bear market. 200 is what I targeted. Right at the top, 200 is what I targeted for it to trade down to. And 50% drop would take it to 166, which is doable because IBM is behaving itself. 160 would make IBM very cheap, and so I would load up the back of the truck. I have accumulated on the... I was going into the top, I sold everything. Now it's 0.3% of portfolio, so I have bought the dip, and I'll trim some around if it gets to 270ish. But you know, I'm focused on accumulating. This is the bear market in progress, and it could get to 160ish for the bigger, even bigger buys. So IBM behaving itself, and now we come to Intel. Oh, look at that, God, madness. Even though I was expecting it to go from around 44 to 95, you know, putting a target on a chart and actually seeing it happen are two different things. And here I had a huge position in Intel. I think 100% invested, and that's been dissipating on this rally. I think, what is it now? I am now minus 14% invested, and it's 0.5% of my portfolio. And so on this 2x, more than 2x, I have sold a lot of Intel. This piece of crap. Look at it. It's been dead. We had one good bull run, which I did accumulate a significant amount here, and I did trim a fair chunk, but once it fell back to here, then you'd wish you'd sold more. So I thought, oh, come on, oh. And then it just kept falling and falling, and look, it was dead here for a year. At 20, these buys were painful, and folk were saying, oh, Nadeem, when's it gonna go up back to 40 so they can sell out? That was, in fact, with my break even, I think my break even here is around 36 is my break even. So all the accumulation and distribution had me break even here, so I was down 50% at the low. 50% drawdown translates now into ooh, look at that, I made over 100%, 135% profit. So 50% drawdown translates into, obviously I've sold most. I started selling 50. That's what, a 50% drawdown I had. So it's painful for everyone. And I started selling. I had a short up to 54. So I started buying once those shorts were exited. Small short position, covering short, and as it's gone up, I've just been trimming, selling. 50% profit here. 100% profit here, 135%. I still hold a fair chunk, 0.5% of portfolio. So I've got capacity to keep trimming up to the 95 target. I'll still hold some when it gets to 95. I'm still going to leave some on the table, no matter what, and I won't put any more sell orders in. Not unless it goes to something like 120. Then I'll be out. So that's Intel is not playing it's doing its own thing. It's completely doing its own thing. It did have good earnings, but it doesn't justify a 2x in a week. They don't justify 2x. It's not. Its earnings aren't that good. They're not that good. Not good as what people think they are. No. It's just late stage bull market when all the garbage pumps, and Intel illustrates what it's like to see garbage pump. Okay, let's go on to the next stock. Clack. Oh, this has gone nuts. This was already stupidly overvalued. It did have a good drop. What did it drop by? 24%. So I did accumulate some around under 1300. I think 1272 starting. I don't think it went down that far, did it? No, it didn't. It went. I don't remember. Yeah, 1272. I bought some. And now I've trimmed it again. What I bought, I've sold, so I'm back to zero now. I hold none. I sold everything on the pump, then bought a little bit back for some exposure. And now that's gone as well, so I hold nothing. This is the target to trade below 1200. That's a huge move. What is it? From here to 1200 is 42% drop. I can't buy it. I can't buy it over 1300. So for me to start accumulate again, it would need to drop by at least 32%. Yeah, so at least 33%. So this has gone nuts to the upside. I've been kicked out. I own none. Look, target about 1,000. This is my target, about 1,000, and start buying big around 1130, accumulating in there, and then it could go some overshoot if you get lucky, but it's gone nuts. It's lost touch with reality. What about the metrics? What do they say? Oh, look, 340% of his PE range. His EGFs don't justify the valuation. This is primed for a huge drop, because yeah, last bear market, what did it drop? It didn't drop much, 39%. So if it repeats, it's not enough. Well, it takes it below 1200, so I would buy a fair chunk, maybe 0.3% of portfolio, 0.4%, but I seek more like a 50% plus drop. So that's clack, nuts to the upside, not playing ball. Lamb Research, oh my bloody hell, this is truly a nutcase. It's a nutcase, nut job. 266% PE range, going nuts. It did have a sizable correction, around 28%, but it's just gone nuts. This is what I'm aiming for, around 156. And it's trading at 275. It did give. I start accumulating under 200, around 200, yeah. And the bigger buys towards 150. And there was a chance we get lucky and goes down to 100, but I can't see it from here. That would be it. Oh, it's not going to do that. What did it do last bear market? 57%. So if you go 57, yeah, I don't. Maybe 120 I don't think it get to 100. 120 it could. But for right now, we're in FOMO Mania. It's gone nuts to the upside. I hold none. So what about Meta? Oh, Meta's played ball. This chart might look messy, but it illustrates it's behaving as expected. It's behaved as expected. Let's take all these drawings off. All these swings are being opportunities to accumulate and distribute. There, look, accumulate below 600, accumulate going below 550, and then you got spikes up to distribute into 733. Spikes, it's 690. I sold a small amount, but really I seek around 732 before I start selling significantly what I bought. I hold a lot of Meta because it's given the opportunity to accumulate. It's having a bear market. This is the bear market. It's down. It's traded down by 36%, and this is the target for the bear market, 441. Heavy accumulation below 430, which was achieved. It achieved it. It fell below 430. You can't see it, but there, look. It fell below 430. So it's achieved the heavy accumulation zone. So Meta is playing ball. You know, people say, where's the bear market? There. This is it. And these are just potentialities of where to accumulate and distribute for. Like buy here to sell there. Buy here to sell some here and there. You know, trimming whilst I'm building a position. Meta is huge. 2.1% portfolio. It's not cheap here, but it's not expensive either. It's got decent earnings growth. So the drop will be temporary. It could go down to under 400. It's possible because Meta is behaving itself. You know, this is my main accumulation zone between 530 and 440, and it could overshoot to the downside to just under 300. That's the maximum what I can calc for. Yeah, 360 even. No, not 360. Just under 400. So I am buying under 530 Meta. I've trimmed some, not much. But that's your bear market is playing ball. Let's look at the next one. Microsoft, another one that's playing ball. Let's get rid of all these. Look, topped 554, fell $200. That's a huge move. It fell by 35%. Yeah, it fell by 35%. That is a huge move for Microsoft. Like the 22 bear market in totality was 39%, so it's virtually replicated the 2022 bear market, and it could fall by 50% to under 300. Though my base case was 340, as you can see there, and it just virtually achieved it at 353. This is why I bought a lot of Microsoft, because it's achieved as good as achieved its bear market target, and now look, it's bounced back over 400, and it's still not expensive. I 5x'd my holding. I think I was 0.3% of portfolio, way up here, and now I am 1.4%. So 5x'd my position, and I do expect it to dump again because it's playing ball. You know, it's behaving as expected. So whilst people looking at the S&P nothing burger and saying, where's the bear market? Yeah, you've had your bear market. It virtually achieved target, and you're sat there looking at the S&P, and I'm accumulating. Yeah, I've been kicked. Yes, I've been kicked out of AMD, Lam Research, Clack, maybe another couple, TSMC, but I've been accumulating these heavy, so I'm selling what's expensive and buying what's cheap. And we should see 340 and lower. It should go down to at least 300 because it's playing ball. And now we come to the nutcase, the real nutcase. Look, Micron, look at this, we're accumulating and distributing here, playing the game. Yeah, it went nuts up there. That gave an opportunity to sell, and then it fell. This has been a fantastic stock to profit from. Yes, it's gone nuts. I thought 200 it would top out. 200, yeah, no, it's gone nuts. But the EGFs, they warned that Micron will go nuts to the upside, and they still say, you know, they're still epic. The EGFs are epic. You don't know what EGF is? Go and look at my spreadsheet. Look at that. Epic. 186%, 254%. They justify the current price. And it's not just current EGFs. You go back to 2025, say June. What are Micron's EGFs? They're going to be epic. Look, 22%, 71%. August, $45, 63%. They're accelerating. They're telling you that the price is going to blast off, and Micron was $120 a share. Yeah, and these EGFs are warning, well, not warning, they're telling you, they're screaming that this Micron is undergoing epic earnings growth. And here in November, what was Micron? 237. What's the EGFs? Still epic. 64%, 110%. And they've just continued to get stronger and stronger and stronger. December, Micron stock price was $272. No, $285. And what was the EGFs? 67%, 168%. Epic, epic. So even though it's on the P range, it's expensive, but the EGFs are epic. And if you go back to December 2024, when it was trading at $84 a share, what was the... Look at that. Just look at that. I was commenting at the time. People were saying, oh, Micron's gone up, should we sell? And I go, no, it's going to go to 200. Why did I say that? Look at that. 361%. 735% EG. That is mind blowing. That, you know, you can't make sense. You're thinking something's broken here. It doesn't register. It can't register. These sort of numbers cannot register. And the P range, you know, yeah, it's gone up a lot, but it's just mind boggling. The numbers Micron was generating at $84 per share in terms of the EGF earnings growth factor were epic. I've not seen, not even Nvidia generated such. Let's look at Nvidia. Look, Nvidia there was 25%, 35%. And Micron was 360%, 735%. That means to the moon. You know, the brain can calculate here. It's probably gonna go to $200. That's like a 3x nearly. That's what the brain can handle. It's difficult to think exponentially. So I am not surprised at 400. I didn't predict it because the brain can't handle such numbers. I'm not surprised it's trading at $500. I am surprised. It's gone nuts. But the EGFs are still strong. It could keep going higher. It could, and I've got nothing. It could keep climbing. Micron could keep climbing because of these numbers. Regardless of what the PE range has fallen because of earnings growth. 500 could turn into 600, 600 into 700, 700 and 800. And it was all foretold here at $80 back here. That if you go read my comments and articles, I'll say you can see I wrote that the EGFs are epic. They're like, you can't handle these numbers. The brain can't cope with them. The EGFs are suggesting it's gonna go to the moon, which it has. You're just gonna have to wait for the bubble to pop. I put Micron on the back burner. I'm out of it, and there's not like gonna be any chance of buying back in anytime soon. All right, what about the big daddy numero uno, Nvidia? It's behaving itself. It's not gone nuts to the upside. In fact, it's not even crossed a new all-time high yet. On these dips, I accumulated, yeah, like the low 170s. There, trimmed a little there, trimmed some more there. I hold. Yes, I still, I'm not sold hardly any. What do I hold? 0.5% of portfolio. Basically in balance. It's got strong EGFs and the P range moderates. What's that mean? It means the bear market is temporary. What's my target? Let's bring the thing up there. Look, 150 is my target. Basically, I accumulate from 172 down as low as it goes. The lower it goes, the better. It could. We'd have to get lucky to see it at 120. Yeah, 43% drop, which is normal. It does drop by such amounts. Obviously, during the 22 bear market, it dropped by a lot more, 68%. But it could drop by 43%. It's possible. 50% is possible, but not probable. But I'm not banking on it. I'm accumulating from 170, then trimming, accumulating, trimming, for which it's given plenty of opportunity. Look. So here, buying, trimming, buying, trimming, buying, trimming, just some activity. And now that it's popped higher, I've trimmed a little more. I'm not selling a lot because I want to build up a position. 0.5% portfolio is not enough for me. So I'm increasing my position. I'm not like selling everything as it pumps. For me to do heavy selling, you need to go to 240 or above 250, which is not going to do because it's playing ball. This is expected given what the other semis are doing. So it's behaving itself. I seek 150 and it could trade down to 130, and if you get lucky we see 100, but between 120 and 100 is getting lucky. So that's Nvidia. What else have we got? Oh, we got Qualcomm. Look, this is playing ball. This is playing ball. This has played ball excellently. This has been a, I won't say excellent, but it's been a good stock in terms of accumulating. It's given plenty of, let's go to this. Plenty of opportunity to accumulate. So much that folk were screaming, crying into the pillows. Everything else is going up. Why isn't Qualcomm going up? Nadeem should be selling, buy something. He goes, no, it's going to go to a new all-time high above 190. Which it did. And so I trimmed a lot. I can't remember how much, but I trimmed a lot. And then we got a dip. Deep dip. We got there. And then we got lucky. We got this lucky one-day event. I sold a lot on that event, which allowed me to accumulate once more on the dip back down. Where do I currently stand? I've been accumulating a lot on this dip. I am currently nearly 2%. That's a big position. 7% AI stocks in total, and Qualcomm's 2%. So I bought a lot, nearly 100% invested or target. So I hold a lot of Qualcomm. It's what about its metrics? There's no growth, but it's cheap. There's no growth, but it's cheap. What about its prospects for the bear market? Well, obviously, sub 130, you accumulate now. From here, obviously from here, you're accumulating around sub 150, depending on how much you buy. From here, given what's transpired twice, you accumulate sub 130, and it could trade down to 100 because it is playing ball. Well, that's my target, 106, 54% drop. That's my target for Qualcomm. And I'm been accumulating from around sub 150. The buys are heavier the lower it goes, and I'll trim around 166. But I'm fine because it's behaving. It's not a question of, why is it Qualcomm falling? That's what it's supposed to be doing. Towards 106, when I'll probably be well over 100% invested. And then I'll rinse and repeat during the next bull run or spike. Here we had a bull market, a huge bull market off the low. That is epic. What happened? 126% gain. Now I'm going to get a 50% drop. And here we got lucky on this off the mad bastard in the White House tariffs. We had a 70% pump. 70%. Obviously, the average is not going to be here. Maybe around 140. But that gave an opportunity to trim. Alright, let's go to the next one. This video is too long. TSM, quick look. Oh, that's gone. Is it behaving? I can't see. Nah. TSMC is not behaving. What about the metrics? Got strong EGFs. And it's not too expensive. It's not gone nuts to the upside. Obviously, it's not behaving because there's no opportunity to accumulate. What do I seek? I'm seeking something like 230 to accumulate. And we've not had any opportunity. You know, it dropped to 320. That's not enough. That's not enough. I want 230. And down to around 190. So there's been no opportunity to accumulate. So it's not behaving. But it's not in euphoria. It's not gone into a euphoria. So it's a spectrum. There's the euphoria stocks like AMD, and the stocks that are behaving like Qualcomm and Microsoft and Meta, and there's the in-betweeners like this one. Okay, last one, Tesla. Ooh, that's behaving. Can you see? Went to $500. We had two pumps. We had this one, the main one, where I sold a lot on, and then we had a collapse down, which I bought on, but I should have bought more. You know, I was fixated on, you know, getting below 200. I did buy some, but not enough. So, and then I sold all of what I bought. So we had two good profit runs on Tesla. One to this crazy price, 290. Then we had a dump to accumulate on, and then another one to sell everything. I sold out completely on the pump. I didn't hold much. I didn't have much left anyway. And I put on a short position above 400. And now we've dropped, and I've accumulated some here. So I have gone from 0 to, where are you? It's Tesla. To 0.2% of portfolio. EGFs are weak. P range is eye-watering, which it's always been overvalued. You know, it's never been undervalued or cheap. So one has to play with the hand that one's dealt. You want to buy the deviation from the high. For me, I'm expecting 230, 55% drop. And these are the areas I'm accumulating. Here from 360 to 315 lightly. Then here's a cluster below 280. So basically, I've accumulated a small position on its drop to 330, 0.2%. And if it continued down to 300, that would have doubled to 0.4%, and heavier still towards 230. And if we get lucky, we see sub 200. Yeah, because now we have, now we have this as a floor. 210 is acting like a floor. There's still a good chance it trades below 200 because it's so overvalued. It's so nuts. There's no earnings to justify the price. That's why it's basically gone nowhere. Look, since 2021, 4 years, it's gone nowhere. So all these fanboys waiting for 800, 900 are just wasting their time. They should have just accumulated when it's dropped. Deviation from the high. The greater the deviation, the greater the buying opportunity. Aim to see at least a 50% deviation, and then trim when it goes to a new high, which is what I've been doing. Towards a new high here, in this zone. I even added shorts on this time. Sizable shorts. that have been paying off. Some are saying, oh, they're short and they're not made any money. So I go, what the hell? How can you not made any money? You traded down by 35%. What were you? How have you not made any money on the short? Unless you're using leveraged. I've got a 1x, minus 1x short, where the average is around 410, something like that, 408. It changes depending on what I accumulate and distribute. So when it goes above 400, I trim a little bit. And when it drops below 350, I accumulate a little bit. So I accumulated some shorts here. I mean, what am I on about? Distribute some shorts. Accumulated some Tesla. It's 0.2% of portfolio. Now I'll trim some over 400. It's behaving. The thing about Tesla is behaving itself. It's in a bear market. It's clear. Look, it topped there December, and it's been in a bear market. It's traded down 32%. It's currently down about 25%. Let me bring it up. Yeah, what's it down? Yeah, look, 25%. I can even eyeball the percentages. It traded down 25%. Currently 25% off its high. If you're not up, say 5%, 10% at least on your short, then you don't know what you're doing. You shouldn't be shorting stocks. Because if a stock is down 25% from the high and you're not made any money, and the high was pretty clear. Well, this is the, in an earlier article I circled where I was shorting. You don't know what you're doing. Stop it. You're going to lose money even if market drops. So that's the last one, Tesla. And do check out my latest article on Patreon. The Pennywise Bull Trap at Stock Market All-Time High. President Pennywise wrecking the global economy, sending rates and energy stocks. Look, there he is, the blooming idiot. Stupid twat. Getting ground troops ready for Iran invasion. They're going to send these little twats. They're going to send all cannon fodder. Little kids. The bloody pedo. There we go. So check out my latest article on Patreon. You won't be disappointed. And do consider becoming a patron for the only $9 for a month. I'm too cheap. I don't know. I'm chill. I'm 58. I want to share. I want to share my work. And I want the incentive to do the work. When you got people like thousands reading your articles, you get incentive to do the work analysis. If people didn't read my article, I won't write them, obviously. What's the point? And my analysis will be probably 25% of what I do. So I'll be chilling out more laid back, less engaged in the stock market, less analysis. Obviously, I'd make less profit. Less accumulation, less distribution. But so that's what Patreon does, and the website before it, which I've got to fix, it gives an incentive to do the work. I engage with people in the comments. I enjoy doing that. I engage on a daily basis. If I didn't enjoy it, I wouldn't do it. You know that. I enjoy engaging with people in the comments, even though they can get a bit heated because people are exposed to propaganda. I am obviously will be exposed to propaganda. When there's a war on, you're going to be intense propaganda. If your country's at war like the United States, then you're going to be under intense propaganda, painting out the victims, the Iranians, and the bad guys. And obviously, America is obviously the good guys. They always are, even though they're blooming bombing someone who's never bombed them. But that's politics. All I want is to do the work and try and make money and share what I know. 30, 40 years now. Bloody hell, it's 40 years experience. I've got to update. I write 35 years. It's more like 40 years now. 40 years experience. Dr. Copper is broken. Terror attacks and Yeah, look, copper is broken because $90 breaks the system. Copper price is up not because of economic strength, demand, is because supply chains are being disrupted. It costs money to pull copper out of the ground. You need diesel fuel, you need sulfuric acid. Yeah, if you haven't got it, you got less supply, and so the price goes up. United Health, yeah, that had good earnings report. That's going to pump. Tesla, I always mispriced. I've just covered. Yeah, look, Tesla. Ooh, this is a good one. So watch this video. This last one. This Hollywood movie. Nah, let's leave it. S&P. Inverse ETF has S&P gone up 2% above its January high, but the inverse 1x ETF SPS is still 2% from breaking to a new low. So I do enjoy engaging with people in the comments. It keeps me engaged. It's like I won't say it's learning something new. It's like reiterating what I know. It's like if you don't reiterate, you'll forget, or your neurons will weaken. So I'm reinforcing what I know, and from that you can act fast. You can act without thinking. Yeah, like accumulation. To me, accumulation and distribution is like breathing. But other people, as I read in the comments, they find it difficult. For me, it's like breathing. It's not something that I even think about consciously. I just do it because I've been doing it for so long. It's just natural. Anyway, do check out my latest article, and do consider becoming a patron for just $9 per month, which is nothing. $9. That's nothing, nearly 1/3 of that goes to on the fees and stuff, so I only get about $6, which is the price of a very cheap martini. And soon, with the inflation that's in the pipeline, those martinis are going to become pretty expensive. But I'll keep it at $9. Don't worry, I'm not gonna inflate it. As long as that covers the fees, most of the fees, 1/3. That's alright, I'm okay. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020. That has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no the crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath? Especially in tech stocks, fangs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished. They're finished as
places to invest.
We keep talking about this falling knife, as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about Stuputa? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.